Do not acquire to eat it, to fly it, to live in it. I actually acquire it to save it and then later exchange it for the things that I need. And that's not Bitcoin specific or dollar specific. Money is a technology that we invented, just like an airplane, to do a specific thing within the marketplace. It was to solve for barter. Like, Jenny, if you did this podcast and you had to barter, you'd go to Whole Foods and say, hey, I just recorded an episode with Jack and here's the audio. I'll take 2 ribeyes. And they say, I don't accept your podcast audio for steak. Sorry, go home. And so we invented money so that you can work really hard at Schwab Network and you get money in return for your time, your energy, your effort, your labor. And then you can save the money and then later exchange it for the things that you want in your life, like rent, like food, like gas, like travel. So in my opinion, Bitcoin is the latest technology to sit in a bad airplane. And I think all of us that have sat on one knows that. None of us want to get on a bad airplane because if you do, you might die. And that's the same thing with money. There's a such thing as a good one and a bad one. If you store your wealth in a bad one, it gets inflated, it gets debased. And when you go want to buy a house, want to buy a car, you realize you can't afford it. And so I really think that Bitcoin is the best money that we know. And it's the equivalent of I want to ride the best airplane. I want to live in the best house. It's a performance technology to solve a very specific problem. Make more of it. And so the number one property is scarcity. And Bitcoin's the only instrument we've ever come across as humans, whether we found it like gold or whether we invented it like Bitcoin, that it doesn't matter the demand, it doesn't matter who you are, where you are, you cannot make any more of it, period. It is as scarce as time. It's the first thing ever. So one is scarcity, is that it doesn't matter who you are, where you are, you cannot print it. The next is divisibility. A good money should be able to measure something in the economy as small as a grain of sand and as large as a professional sports team. And Bitcoin can accomplish that. The other is portability. If I can't move it and I can't transact it, it becomes far less valuable. Bitcoin, I can move anywhere in the world on my phone at zero cost. And then verifiability. It's counterintuitive because you're like, we don't even know who created it. It doesn't have a governing board or a CEO. But it seeps into the cracks and it takes over. It sucks in liquidity. Money is meant to be won. If I walked into Chipotle and I said, hey guys, I have 47 tokens, and they're like, oh, nope, we accept the 48th token. Sorry, you can't eat a burrito here. No, we want one money to exchange all of our contributions to each other. And so Bitcoin has found a way to suck in liquidity and conquer Wall Street, government and nation states, tech companies, San Francisco value. As I mentioned, money as a technology was designed to be all of it. I acquire Bitcoins because I've created value for the world and I want to store that value. I want that value to be mine. And at some later date, whenever I feel like it, I want it to be a house. I want it to be a car. I want it to be a medium rare ribeye at a steakhouse on the river of Chicago. Shout out Chicago. So that's the point of it. And whether I sell that Bitcoin for dollars to buy the steak or whether the steakhouse accepts Bitcoin, to me, it's not that interesting of a debate. Who cares? What really matters is that Bitcoin now is the 5th largest asset in the world, soon to be the 2nd behind gold. And there's no reason it can't be larger than gold because it's a better money than gold. And that to me is the story. That's a signaling that more of the world's contributions, value we're all creating, is picking Bitcoin as the tool to store, right? It's now storing $2.5 trillion.
Your XXI, fittingly so. But where does that public undertaking stand? And really, what have you learned already as a company leader throughout the process?
So where it stands, we've announced in a press release that we've confidentially filed with the SEC. So we are very confident. The SEC has acknowledged our filing and we're excited. We're excited about where we stand and that XXI will be listed on a stock exchange shortly, we believe, and we're hopeful. As far as the broader market and being a CEO in this business, I think part of the attraction to 21 is the founding group and that I've been a CEO in this industry building high growth, cash flow generating businesses for a very long time. And Tether has as well at a much larger scale.
No pun intended, that we've seen quite literally play out in real time.
Yeah, I think one of the biggest is our intent to build software and an operating business. I want to be clear. Michael's a friend of mine, pioneered this idea of a Bitcoin treasury company. He deserves all the credit and success and Bitcoins that he's earned. So I don't know his plans. I don't want to speak on his behalf. The internet loves to speculate that him and I, in our free time, box against each other or something. It couldn't be further from the truth. We share stakes and laughs, but Bitcoin per share. So we're measuring the Bitcoin on our balance sheet on a per share basis. We go out, we raise capital, we acquire Bitcoin, we launch new products, we sweep cash flows into our Bitcoin treasury. We, bring SoftBank into the business and acquire $1 billion more of Bitcoin. That Bitcoin per share grows from 0.05 to 0.06 to 0.07. And our shareholders are not getting wealthier in dollar terms and having to measure that against the inflation that they're realizing in their life. They're getting wealthier in Bitcoin terms, which we believe is tremendously innovative to bring to capital markets. Is we're changing the denominator. We're changing the hurdle rate. We're changing what we're measuring success in. And we're measuring it in a money that can't be printed. And that's the best performer that you could possibly have in a portfolio. And so an XXI shareholder is someone that wants to get wealthier in these coins and tokens. I honestly believe that they are technologies where a founding group can print a lot for themselves, and then they pay influencers and other ways to monetize it by selling it to retail. I consider it an arbitrage on the trend. But even if you were to give the benefit of the doubt to these technologies and say, man, what if one of these technologies did become the next Apple computer? Well, Apple computer is worth about $3 trillion. It's worth about as much as Bitcoin is today. For me, Bitcoin is going after being a hard sound money in society, which gold is already worth over $20 trillion. And the market size for humans that are storing value is about $400 to $500 trillion in purchasing power today. So I think Bitcoin is an order of magnitude larger in its.
But yeah, I believe you have said you could see Bitcoin to, $1 million. I've seen some of your targets by 2026 that are clearly far above where we are currently trading, finally breaching that $120,000 level. So what are the risks to get there? What do you see as like the next leg of catalysts to reach? Hopefully some just mass information for the broader person that doesn't really know a lot about this space, but also to achieve, say, $1 million.
Yeah, well, as a future public company officer, being careful here and not making explicit price predictions, what I will say is I think the very simple mental model to use in Bitcoin is that Bitcoin equals fiat liquidity plus technology. It's a very simple idea that if you believe technology will continue to improve the world and that the story of humanity is engineering a better world, and if someone wants to buy one Bitcoin and no Bitcoiner is willing to sell them a Bitcoin unless it's $500,000 per Bitcoin, well, guess what? The price of Bitcoin is now $500,000. And what people have to remember is that with such a scarcity, with such an asset that carries such scarce dynamics, no amount of demand can create more supply. If everyone wanted an iPhone, Apple can just make more iPhones. That's why the price is not as volatile and as surprising to the upside, because they can make more. If everyone wants a Bitcoin, we can't make any more. And so to get your Bitcoin, you have to go higher in the market. Hey, is there enough Bitcoin for me at 120,000? No. How about 130? How about 140? How about 150? And so prices are set at the margin. And so if we see $10 trillion of liquidity in the US financial system alone, not to mention economies like China, Japan, that are equally in trouble or sometimes more, I'm sorry, I hope you'll still be my friend, but I can't afford to pay it back. Now, the US government conveniently has a third option that none of us do. They can print what they owe. They can devalue the debt itself. And so if it's a multiple choice question, it's pretty obvious which one you circle, the latter. They're going to continue to debase and print what they owe. The United States of America cannot default, and they also mathematically cannot afford to pay the debt back. And so no matter how you slice it, no matter how many economics classes you take at Harvard, the reality is they're going to find ways to print more money, to increase the liquidity and debase the dollar. And for that reason, the 60-40 portfolio is going to increasingly look bleak. Bonds are going to continue to perform poorly. And anything that is scarce and that is hard against an ever...
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the